Hey there, Tamir from Fibonacci-Traders.com here. Welcome for another weekly edition, my top stocks to watch for the coming week. And we are heading towards another very interesting earnings week. We have Apple, AMD, and many more other names. So like, subscribe, and stay tuned for the rest of the video. First name is CMG, Chipotle Mexican Grill. Pop-up, post-earnings, gave back almost 60% of all this pop-up. We have 1866 needs to hold, and then this gap will get filled. I'm looking for long continuation. First, I want to see all this week getting filled. We will start taking our long position and close above 1903, and each and every level to the upside price closes, we will add a small portion until above 1943. We will have 100% of our size. Above 1974, we are heading to close this gap at the 2066. AR is next. This area, the 2870, was a very important area of support. Resistance, broke above post-earnings. Friday, inside candle, closed above the 2870 area, very important. Now I want to see long continuation above 3030 towards this white trend line that helps us to identify the higher highs, and 3235, this area in my opinion will be the next major resistance. ARRY still on my watch list. If you saw previous week and the week before that, my top stocks to watch, you know ARRY is still on my list, and we have a broadening formation. Now we also have a double bottom scenario of this area, of this red trend line that goes and helps us to identify the lower lows. But we also have this upper red trend line, the upper border of the broadening formation, that helps us to identify the higher highs. So at first, I want to see a break and a close above 1856. Above 1856, we will start taking our long position slowly, maybe 25 or 30% as initial position. Above 1911, above 1970, we will add more, and then towards the 2163. In my opinion, a weekly close above 2163, and it's a bit far, but never say never. Above 2163 weekly close, we will see this red trend line once again. And of course, everything you see and hear on my video is for educational purposes only. It's my opinion. It's according to my risk tolerance, my strategy. I don't know your strategy. I don't know your risk tolerance. So do not follow anyone on social media, and it doesn't matter how many subscribers or followers they have. They don't know you. You don't know them. In the end of the day, make sure you make your own due diligence. You need to take care of your money. If you want to start somewhere, how to do it, check the Fibonacci Academy playlist. 25 videos, 26 videos already on how to become a better trader each and every day. We have the technical side videos. We have the psychology behind trading videos. Each video no more than 15 minutes. So take one video or even two videos each day, and you will see improvement each and every day. If you want to take your trading journey to the highest level, you're more than welcome to join Fibonacci Traders Academy, whether it's the one-on-one live program with me, available in English or Hebrew, or the online program, same program, pre-recorded, available in English or Hebrew. Choose it. Choose whatever you like. Both programs, I guarantee, no small words, no exceptions. Guaranteed lifetime access, support, guidance from me, and of course, all Discord channels, including the premium channel, for life. So you will get support and guidance not only from me, but from a very special community of Fibonacci traders. Check it out. BBIO, still on my watch list. I'm I'm looking to go short below the 23.74. 1-2 days below it, and we will see this trend line over here, the lower border of this downtrend channel, and then 21.24. If BBIO will break below this lower trend line, we will see a steep fall towards the 1885 and closing this gap over here at the 1837, 1840. But we don't need to guess. We don't need to guess when to go short, when to go long, when to put our stop loss, where to put our stop loss, and how to manage the risk. Because we have trend lines that shows us the way. We have Fibonacci levels that shows us the next support for price action, or if price will break above this trend line, this downtrend channel, above the 26, maybe then we can start thinking long. Always think and be prepared for both sides. And of course, we have the ATR. CLF is next. I want to see continuation above the 1611, another day or two closing above the 1611, and then we will start taking our long position towards the 1680, adding to the long position above 1680 towards the 1770. Macy's with a double bottom scenario, very nice double bottom scenario of the 1054. Now I want to see long continuation above this area, the 1160, 1170, long continuation towards the 1213, and then 1254. 1254, only by looking left, we can understand already from now that if and when price will reach this area will act as a very tough resistance. Above 1254, where price will head, no need to guess. We have 13, 15, 14, and then we have a gap over here. United States still inside this upper trend channel, uptrend channel. We have Fibonacci. Support 3240. Long continuation above 3370. This area, this trend line might be a very tough resistance, but as long as price will do something like this. 1 second. We'll do something like this. We're good to go. There are also good resistance. Not all resistance are bad. This resistance helps us to identify the higher highs and higher lows with this support is the definition for an uptrend. CRWD, CrowdStrike, uptrend, but we need to wait. If you're not long yet on CRWD, we need to wait. We had an uptrend, retracement, 618 Fibonacci level, holding a support. It was resistance over here just by look left. Support, resistance over here. Support and resistance over here. So it's a very important area of support and resistance, the 172 area. Now with the doji, inside candle, let's see continuation. Maybe a bounce above the 176, and then we will start slowly building our long position. No need to go 100% at the first buy-in. You can add more above the 180, add more above the 185, because if we will see this bounce back up, next resistance will be this yellow trend line. Short continuation below 172 towards this yellow trend line to the downside. Always prepare for both sides. No one knows what will happen next, but with the help of Fibonacci trend lines that goes infinite to the future, you can understand with high probability, in my experience, with the highest probability there is, where price might be heading next. No other indicator None of them can let you know where price might be heading next. All of them, without exceptions, gives you where price came from in the past. Why do I need anything to let me know where price came from? I can look by myself where price came from. My problem and your problem as traders is to know with the highest probability. Nothing is 100% guaranteed. With the highest probability where price might be heading next. What should I do now? Fibonacci and trend lines with a little help with ATR, you will know and you will become your own indicator. Intel, gap up. Now I want to see 35 area holding a support. I want to see a close above 36, and then we will start taking our long position, adding above the 37 towards the 38 and 40. Roblox, last but not least, still on my top stocks list. Looking for continuation, a break at least 2 days above the 32, and then we are heading towards the gap at the 37. But if bulls will give up on the 32, and eventually if they will not succeed to break up and above and close at least 2 or 3 days above the 32, bulls will give up. And if bulls will give up, bears will come forward full power, breaking below the 30-30, and then we can start taking our short position, slowly building our short position towards the 29. 29 was important support, tough resistance, support. Below the 29, where price might be heading next, we will see the same price action we saw over here, a bullish price action, same price action, but we will get to the downside, a bearish price action to the 26 and maybe even to the 25. Always prepare for both sides. Never be biased. Don't look for signs that is confirmation biased to your point of view. Your only job as traders is not being a trader. It's being a risk manager, because the only thing we as traders we have full control of is risk management. If price, what we will do if price will break above the 32? Will take long. But where would we put our stop? How much am I willing to risk if Roblox will break up and then go back down and hit my stop loss? How much am I willing to risk on this position and on any other position? My point of view, before I go in, it doesn't matter if it's short, long, swing or day trading, I'm in the state of mind that I'm going to lose this trade and the next trade and the next after it and the next 50 trade. I'm going to lose. This is my mindset. Now, it's much easier for me to calculate how much am I willing to lose. If I know that I'm going to risk and I know that I'm going to lose, and anyway I'm going to take this risk, how much am I willing to lose? Think about it this way. It will help you change your mindset. It will help you to become a better traders. Don't worry about the winners. Winners will take care of themselves. It's about the losing trades. How I manage my risk, and do I wait for my stop loss to hit or not? So once again, thank you very much for joining and watching this video. I hope you found it helpful and educational. If you did, like, subscribe. Don't forget, check my stock market weekly recap. Link will be in the description below, or go to my YouTube channel. It's one video before this video, And don't forget, notification bell on. Each day, 8:30 a.m. Eastern Time, live pre-market show, Q&A. Until then, trade safe and please stay safe.